yes, you're right, I am German, right? And also for your information, yes, I can take spicy food because I'm already more than 5 years in Malaysia. Okay, thank you. And I'm very pleased, and also a great thank you to the discussion leaders for conducting this session. As I said, usually very challenging at this time of the day, and but for sure we are going to have interesting discussions and interesting topics to cover. Just to give you an idea, when we talk about global trade from a financial dimension, we are talking about 14 trillion US dollar per year, which we see in the global trade. Also, another fact about global trade that which needs to be taken into account, and why we are talking about the financial service sector, is that still 90% of this global trade is supported by trade finance. So means financial institutions still play a significant role in trade finance. So another important note to make is on the importance. If you look at global trade, how it affects GDP, then it's significant. If we see, for example, a 2% decrease in global trade, that translates into 0.5 decrease of the global GDP. Right? So it's one of the major aspects which also needs to be considered. Nonetheless, after making this point, I would like to start with Mr. Saif Malik as a discussion leader. He is Managing Director and Head of Islamic Finance Asia Pacific for BNP Paribas here in Malaysia, where he joined in 2011. Some of his former colleagues are even here, I realize. Saif Malik is responsible to grow the Islamic finance footprint of BNP in the Asia Pacific region and to develop Malaysia as a regional Islamic finance hub for BNP Paribas. He is already experienced in business development of Islamic banking solutions in the region and brings functional skills in structuring Sharia-compliant corporate banking, capital market, and treasury solutions. Prior to this, Saif Malik was Director of Islamic Origination for Standard & Chartered, Sari, here in Malaysia, where he was involved in origination and structuring Islamic capital market and treasury solutions. Saif Malik started his career in consulting with companies in Malaysia and Singapore, then moved to Bahrain to work for the accounting and auditing organization for Islamic financial institutions before moving back to Singapore and joined Bank as head of Islamic finance. Subsequent to that, in 2007, Saif Malik joined the Islamic Bank of Asia in Singapore as vice president, and then, as mentioned, moved to Standard & Chartered Sari. He holds a Bachelor of Honors of Accountancy, and he completed his MBA specializing in Islamic finance. His talking points will be on, firstly, the impact of the Eurozone crisis and dovish regime of US capital flight to Aean. Secondly, Islamic finance,
test of being here in Malaysia is whether you can eat durian. I don't think it's spicy food. Spicy food, within 3 months you can eat spicy food, but durian takes much longer time. I'd like to start with something light, nothing like the one that smells like a durian, but while we're waiting for some other audience to trickle in. One fine morning, there was a Pakistani was walking down the streets of New York when he saw a little girl being attacked by a vicious dog. So the man, being a responsible citizen, Samaritan, good Samaritan, he rushed to the aid of the girl, fended the dog away, and killed the dog in the process. Shortly after, a plump-looking policeman came rushing to the scene of the crime, scene of the incident, and he said, "Congratulations, you are an American hero." And the Pakistani said, "No, I'm not an American." So the policeman said, "It's okay, you are a New York hero." So the Pakistani said, "No, I'm not from New York." So that agitated the policeman, and he asked, "Then where are you from?" He said, "I'm a Pakistani." So the next day, the newspaper tabloid headlines read, "Muslim terrorist assaults little girl and kills New York dog." And that is a story that relates to the misconception about Islam, which may also be some misconceptions about Islamic finance. So what I intend to do over the next 10 minutes or so is to share with you what Islamic finance is all about and its growing influence within global markets and global trade. Ladies and gentlemen, the Islamic finance industry is today, after a 4-decade evolution within the modern banking system, is a $1 trillion industry. It has grown at a rate of 18.8% on a cumulative average growth rate since 2007. There are 675 financial institutions in more than 55 countries globally offering Sharia-compliant products and solutions. The Islamic finance industry offers a broad range of financial solutions, ranging from plain vanilla deposits and financing to structured product, trade finance, structured trade, to more exotic products such as hedging and derivative products, to DCM or debt capital market solutions such as Sukuk. Sukuk has all this while been the alter ego of Islamic finance. Last year was a record issuance year in Sukuk issuance. A total of $85 billion worth of issuance were printed last year in all currencies. And the first quarter of 2012 was also a record quarter for Sukuk issuance, where more than $20 billion worth of Sukuk was printed in all currencies in the first quarter. And we're expecting this year to also be a record year in terms of total Sukuk issuance. Now, with that backdrop, ladies and gentlemen, let me share with you some key trends that we see happening in the Islamic finance industry. The first trend has got to do with liquidity flow. As a result of the uncertainties in the Eurozone market and the sluggishness of the US economy and the dovish Fed rate regime of the US Fed, what you and I see is that there is this capital flight phenomenon of these US and Eurozone investors looking for better yielding assets. What we also see is some of this liquidity is flowing into the Islamic financial markets. We have seen and we have tracked the yields in the secondary Sukuk curves have been declining since October last year. And even the Dubai sovereign Sukuk, the Dubai Sukuk, the Bahrain sovereign Sukuk, and the Malaysian Sukuk have all been showing declining trends. Now combine that with the petrodollar wealth of Middle East investors and the deep Islamic liquidity among Islamic investors in Malaysia, and the growing affluence of Muslim investors in Brunei and Indonesia, and the growing acceptance of conventional investors to Islamic papers, we are seeing that there's a huge liquidity pool coming into the Islamic finance market. And this liquidity pool needs to be efficiently allocated. And that's one key trend and opportunity that we see in the Islamic finance market. The second trend that we see happening in the Islamic finance market is the growing sophistication of Islamic products and diversification of investors coming to the Islamic market. Now, the sweet spot of Islamic papers, or Islamic sweet spot of Islamic, the tenor maturity of Islamic papers has all this while been the 5-year tenor. Now, recent issuances have defied this preference, long-standing preference of Islamic papers. If we look at the Saudi electricity company's Sukuk issuance that was just issued and launched and closed this week, that was a $1.75 billion issuance, which had a very chunky 10-year tenor tranche. The Malaysian Wakala Sukuk that was issued last year also had a 10-year tranche. The Republic of Indonesia Sukuk was a 7-year issuance. The Bahrain sovereign issuance was also a 7-year issuance, which BNP Paribas brought to the market. Now, this proves that there is greater sophistication in Sukuk instruments or Islamic instruments, and this is also a result of greater acceptance and diversification of the investor base, looking and accepting Islamic papers that is coming to the market. And this is a very important trend that we see happening in the market. The third trend has got to do with the opportunities in the halal economy. The global value of the halal industry is estimated at $2.3 trillion annually. With almost 50% of the global Muslim population concentrated in Asia Pacific, from Pakistan right up to Malaysia, Indonesia, the opportunities are huge in Asia Pacific for the growth of the halal economy. Europe has a small but growing Muslim population of about 50 million people. In the US market, the population of Muslims in US is about 8 to 9 million people. And there are about 1,000 products which are certified as halal. Now, this compares to more than 86,000 products certified as kosher for the Jew population, which is just about 5 million people. Hence, the opportunity for the halal certification market, halal certification products in the US and Northern American market is very huge, and it's a great potential. Now, Islamic finance and halal economy can be called sister sectors of the Islamic economy. They are the twin pillars of an Islamic economy. One is on halal products, and the other is on offering Islamic financial services. The convergence of these two Sharia-based industries forms a strong economic platform for global markets. However, the irony is a company that is involved in the production and manufacturing of halal products may not qualify as a Sharia-compliant stock. This is simply because the methodology that is used to certify a company as a Sharia-compliant stock uses not only the core business activities of the company, but also employs certain financial ratios to ascertain whether the company qualifies as Sharia-compliant or not. Therefore, a company that is involved in the manufacturing or in the halal-based economy that employs or uses excessive conventional debt may disqualify as a Sharia-compliant stock. Hence, why I'm saying this is because it's both ways. The opportunities for Islamic finance to tap and penetrate the halal-based economic companies is huge, and at the same time for the halal-based economic companies involved in the halal economy to leverage on Sharia finance in order to be called a Sharia-compliant stock is also quite a gap that needs to be filled. Now, ladies and gentlemen, as a concluding remark, let me just share with you that the origins of Islamic finance has been trade. The Prophet Muhammad himself belonged to the Quraysh tribe that was active in the caravan trade in those yesteryears. The Prophet Muhammad himself was a very successful businessman and would often be involved in the caravan trade himself, in the trade between Mecca and Syria. Some of the contracts that the Prophet employed in those days is until today being used to manufacture or to structure Sharia-compliant products and solutions. Some of the products that may be relevant to importers and exporters in the global trade business includes financing of imports of goods, export financing, or rather receivable financing for exporters, bank guarantees and shipping guarantees, and invoice financing. In the ASEAN region, Indonesia is the largest Muslim populated nation. Brunei is one of the largest GDP per capita country. Malaysia is well known as the global capital of Islamic finance. With these ingredients, Islamic finance is well positioned to play a pivotal role in the growth of trade in ASEAN.